It's 5 p.m. here in Seoul. Thank you for joining us on Arirang News. I'm Devin Whiting. With the hotter than expected U.S. inflation, the South Korean currency has fallen to its lowest level against the greenback in almost 13.5 years. Worries about bigger interest rate hikes by the Fed have also sent stocks plunging. Eum Ji-young has more.
The South Korean won has tumbled to yet another more than a decade low against the U.S. dollar. During Wednesday's session, the exchange rate crossed the 1,391 mark, reaching 1,395.5 at one point. This marks the weakest figure for South Korea's currency since March 2009, when it topped 1,422 won in the aftermath of the global financial crisis. The won closed trading on Wednesday at 1,390.91, up about 17.3 from the previous session. The plunge came just hours after the announcement of the higher-than-expected U.S. Consumer Price Index, jumping by 8.3% on-year last month. The won is likely to weaken further as there are forecasts the latest U.S. inflation data will push the Fed to maintain its hawkish stance on monetary policies, further strengthening the greenback. Market experts anticipate at least a 75 basis point rate hike by the Fed, and thus more volatility is expected in the local financial markets. The benchmark Kospi also fell below the 2,400 mark earlier during Wednesday's session, prompted by the report on U.S. consumer prices. The Kospi fell 1.56% on Wednesday, closing the day at 2,411.42. The tech-heavy Kosdaq also dropped, falling 1.74% to close at 782.93. The South Korean government says it'll do all it can to deal with the volatility. During an emergency economic task force meeting on Wednesday, First Vice Finance Minister Bang Ki-sun said growing uncertainties due to possible further rate hikes in major economies have caused greater volatility. He added that the government will monitor the financial and the foreign currency markets with extra caution and called on the related authorities to thoroughly search for all available measures. Eum Ji-young, Arirang News.